Okay, good morning. It's time to get going. Welcome to QuantBox Live, where we uncover the best fundamental opportunities by looking at the long term economics, but as well as looking at the market. Yeah, economics and markets. Very often, two different things. Well, we're trying to look at long term and short term to make informed investment decisions. So we'll look at things like market sentiment, inflation, employment, GDP, technical trends, open trade positioning of institutional investors, but also of retail. No, no, it's not going to work. Of retail, and so on and so forth. Even seasonality, very important. So today we'll take a look at the risk gauges for sure. We'll look at some trends. We did this yesterday, looking at positioning and flows for institutional investors. Today we'll have the meeting minutes by the Federal Reserve Bank of the United States of America. And well, we're going to try to figure out what are they thinking, right? It should be a game show. What are they thinking? Yeah. Cool. Anyway, so we'll not do that today. That's more of research for you to do. We'll definitely do this sentiment gauge. That's where we look at the S&P 500, gold, yen, dollar, yields, and volatility as a basket to find the intrinsic underlying trend, and then organize our thoughts. This is long term. This is what should be happening. This is what is happening. Wowzer. QuantBox is powerful. It's kind of like Bloomberg, except Bloomberg is $2,200 a month. Oh, well, check that out. Maybe it's not as powerful as Bloomberg, but it's cheaper. Anyways, it's pretty good. It's pretty amazing, actually. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah, it's been a tough morning. Only one energy drink so far. So if I'm grumpy, I apologize now. It's not an addiction, it's a passion. Yields, all right, stabilizing. Stabilizing. We were 4.3 yesterday, now 4.28. That's good and moving in the right direction, but not amazing one way or the other. Gold giving back quite a bit. Yeah. Gold is hot, then it's not. Or did I say gold? Oil is hot, and then it's not. And then gold, yeah, I think that's pretty much where it was yesterday. S&P 500 not above 5,000 anymore, which is good because I'm hedged, which is good. It's good. I have a just in case position. And right now it's not helping, but it ain't hurting either. And Bitcoin fell quite a bit yesterday. Yep, fell quite a bit yesterday. Mm, 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 mm. I got one and then I got rid of it. I think that was the right thing to do. All right, so what's going on? Ooh, just an ever so double tick now. Double tick. Two things now, two time frames are now ever so slightly bearish. -2 out of 6. Okay, we'll see monthly evaluation. Okay, has a couple of things working, but what's changing? Gold is changing. Yields are changing. Yields are way up. Dollar's getting strong for the month. Volatility has grown for the month. Yeah. So we get a 6 there. I'm going to meet with the developers again soon, and I really am an advocate of them putting a put call ratio in here as well, so that we have 7. Seems to me we should have 7, an odd number versus an even number. Okay, and nothing's opened yet, but this is when was the last time we had 2 time frames, either risk on or risk off? It's been many weeks, maybe a month, maybe even more than that, maybe 6 weeks. So something might be happening, and it is seasonal for this to happen. So I'm okay with that. Today we have Nvidia reporting. It seems to me it's going to be very difficult to impress anybody. Hey, revenue is only up 300%. How come not 400%? Right? I thought it'd be 400%. Like I don't know how you get these right. So, anyways, wowzer. Nvidia reported today, but as I mentioned earlier, the Fed meeting minutes are coming out today. And these are important. So, um, yeah, so pay attention this afternoon for sure. And of course, either of those things could change this to heavy risk off or back towards risk on. Is anything going on right now? No, not really. Stock market down, stock market down, stock market down, stock market down. Hey, maybe the stock market's going to fall. Yeah. Well, I'm hedged over there. Oh, Jim, I was thinking about that email you sent me earlier about the gauges on some things not adding up. It's because I think um, what we're doing is the developers, and of course, they have to go page by page by page. They're changing. We've changed the score to add a few more things to it, and they haven't updated the gauge to reflect the table, which shows you they're two different things. They're like, why does it have to be so complicated? But anyways, the developers have it as two different tables, so now they're going back and slowly changing the gauges. So I think that might be what you saw. Yeah, no. Well, the thing is, everything is in flux, and it has been for several months. Um, and so, yeah, there's a lot of things going on, and I still haven't unlocked these things that I haven't even, that have been done, and you haven't even seen yet. So, but anywho, let's just kind of look at the market. Okay, we had the markets going up and then down. Let's kind of what a 4 hour. Yeah, this is kind of where we are. Um, for the month of January, up is unusual. That's all we know when we look at seasonality. This is the Dow. I'm just looking at the stock market. I'm not particularly thinking of Dow, just in general. Up is pretty unusual. And well, when we started the year, the market, not the economics, just the market thought the Fed was going to cut 6 times, which didn't make any sense. No sense at all. And now the market is learning that that's not likely anymore. Okay, so we had this up, which is the unusual part. What I would have thought if I were me, right? I would have believed the move was going down here. Okay. That's what I would have thought. But nonetheless, it came down and it went up. And so now we're up here. What I want to point out is, it would be technically significant, okay, if we stop going up. Okay, so there's that move. And then this is the warning, the 100% retracement. Okay. And again, this is in my book. I mean, it's that sort of, let's say, important that you start to potentially work your way down. There could be some up and then some more down. And I'd say at the very least, the distance from here to here is the unusually overbought, and that in a normal year, it should be even lower than that. It should be even lower than 3,700. But I'm not making a call like it's going to. Yeah, Lucas says it sure looks like the old man. Yeah, without a doubt. The biggest thing, the biggest stink here that I would make with this pattern is the 100% drop from the top to the neckline. And in particular, on a monthly M3 that carries even greater weight. And so, what you've been taught, and anyways, what you've been taught is to expect something like that, or to expect something like that. And then you go from there. So, anyway, so it seems on these smaller time frames, we got the respect. That's what it seems. Now, remember, NVIDIA could change this. The Fed meeting minutes could change this. It doesn't mean it has to go down. What it means is this pattern is bearish. It's a reversal pattern. Okay. And so you could start to see lower highs and lower lows. Yeah. Yeah. Cool. In a couple of weeks, Amazon's being added to the Dow. Adios, Walgreens. Yeah. Which is a kind of an interesting sign, isn't it? Is the corner drugstore dead? Do you just get your drugs at Amazon now? Kroger, which is a family that owns Kroger grocery stores, they want to buy Albertsons, and Albertsons wants to be bought. So good, they want to work together because they're struggling to make money because of Amazon. So you're like, huh? And yet the government's going to get involved and say, no, no, you can't do that. Why not? I think it'd be hard to. They're literally the Kroger family is like, we have to compete with Amazon and Walmart as a grocery store and as a drugstore. Like we have, and they're going to price low, and they do things like subsidized shipping, so you can get 2 days shipping for free. Like, how do we compete with that? And the government's like, no, you can't. You can't become one big group. I'm like, I think it'd be tough to deal with Amazon and Walmart as competitors. But anyways, anywho, all right. So yeah, so reverse engineer it. Okay. And if we got something like that, that creates a lower low, which then makes next month kind of interesting. So I don't mind. I'd actually like to go through like a 6 week bearish move. Yeah, I'm okay with that. I mean, we're talking about a kind of move that Bitcoin would do in a day. Like a negative 8% is a bad day on Bitcoin. I'm like, how about let's do negative 8% in the next 6 weeks, and then I pick it up cheap. But anyways, here's S&P. Again, a good leading indicator here. If I back out on, put it on the 4H, this white zone is actually where I'm short. I don't remember the specific price, but probably something like that. So I'm actually short this, but just like the other chart, I said there was one of two likely patterns. The one I chose was this pattern. So yeah, I'm short in that zone somewhere. As a hedge, I'm also heavily long, but I'm triple leverage short. So we'll see. Maybe topish, right? Do you want to call that a double top? This is all the technical analysis we're supposed to be doing on top of the fundamentals. The fundamentals, and I don't mean the fundamentals of, is NVIDIA a good company? What I'm talking about is seasonality of what the general stock market does this time of year. And this is much more up than normal. So we could have a small amount of capitulation. Wouldn't it be, what would you do? And this is kind of the investment process. What would you do if the S&P 500 fell back to 45? Would you buy it down there? Yeah, I think I would. What would you do if it dropped closer to 41? Would you buy it here? Yeah, I think I would. That's all I'm saying. I want it to fall so I can buy it. That's all. That's all. Okay, just notice on the daily, we're on that 21 yet again. And usually, it holds, but the more often you test and get mediocre results, the more likely it wants to bend and go back to the 200. So today would be probably the break of the 21 day. If meeting minutes said the Fed doesn't want to cut at all in the first half of the year, you can get down. And then NVIDIA only delivers 20 billion in profits for the quarter. They're like, oh, that's it. Okay. I mean, that's not a lot of money. That's how much Jeff Bezos made this quarter. He sold Amazon stock. I mean, look, if Nvidia makes 20 billion in 3 months and Jeff Bezos makes 20 billion in 3 months, it's not that much money. But anywho, maybe, right? Maybe it's profit taking time. Okay, fine. That's all. I'm okay with that. Let it come down. I will not freak out because QuantBox has the economic data, and the economic data tells me where we're going. And so if it comes down for a few weeks, that's cool. I'll buy it. And I'll be an owner. I'll be a boss. Okay. So that would be the big thing to be watching today. And then, you know, Bitcoin finally kicking off that resistance line. So maybe you catch a bid on Bitcoin around 59, but the next one is really not 59, 45.9, so 46,000. And then the neckline here is, closer to 43,000. I think the next interesting number is right around that daily 21. We'll call it 47.5. Let me just draw it. Let me just draw it. Wayne, stop a talking, start to drawing. Okay, okay, okay. So demanding. All right. Maybe kick off that future 21. Okay, I'm trying to guess where this will be. So it'll be up and to the right. Okay. 48, 49, probably 49, huh? The other one I wanted to point out is my WTI. Definitely a little collapse yesterday. Okay. We dropped through the daily pivots. Okay. And then dropped through the daily pivots. I've dropped through the daily pivots. Yeah. So technically things changed. Okay. Technically. Now, fundamentally, not a lot has actually changed since then, since before. But technically, okay, you see this? Okay, this is supposed to be making a higher high, this kickoff right here. So the double top lower low, okay, that's your freak out right there. Freak out. Ding, 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 freak out. Okay, that's your freak out moment. Double top lower low. The secret word for that is hammock. And that seems to be the current short term trend. Okay. And now, if you want to become a bull, you should look for this pattern in reverse, double bottom with a higher high, then catch the higher low. Cool. So, again, watch the stock market. The stock market is going to jostle for position around the Fed meeting minutes and NVIDIA today. It's going to be a huge day. Huge. Okay. I don't think it'll be one of those days where nothing happens. Yeah. So be careful, be smart, be wise, and you shall be fine and prosper. Peace on earth. May the pips be with you. May your profits be above average. Like I said, I have upgrades that I've done for QuantBox or to QuantBox for you. I just don't know when I'm going to tell you, but they're done. Last time I looked, they were done. They're done. So I've added upgrades. So maybe next week, maybe next week, I'll start unlocking them for you. Okay, but just know that lots of work is being done on QuantBox, and it has been for many weeks since I think about the middle of November. There's been a lot of work being done on the back end. So you'll see it soon. But again, peace.